What a wild earnings call once again for Tesla. I mean, seriously, if you look into the numbers, there are some amazing things going on underneath the surface, and honestly, it's just, I don't know how else to describe it other than amazing. But slow down. You guys know I'm not a pumper, so I have to be honest. They were not great either overall, and I really think Wall Street is setting up to screw Tesla stock, and of course, us by default, because we all own Tesla stock. So I will give you the reasons why they may try and what it all means. And we will have a special guest analyst on at the end to give his take as well on the earnings call that you honestly don't want to miss it, guys. That's all I can say. Let's just say it's a bullish take on Tesla. So make sure you like the video and subscribe to this channel if you like the truth without the hype. And yes, the Tesla dip sale is live for my group where you get access to all my buy and sell alerts on Tesla in real time, my watch list with price targets. You get 5 free courses, the best Discord out there, access to me for Q&As, and you can slide in my DMs. You basically get full access to me and a ton more. So check out the pinned comment down there and see if it's right for you. So Tesla had honestly a mixed or okay earnings call. I mean, there was some good, some bad, some good long-term signs, and some terrible short-term trends that we cannot ignore either, guys. So let's cover it all. But before we even get that far, I cannot wait for my main man Gordon to come on and talk about Tesla's demand problem or their inability to turn a profit. I don't know, guys, it's his words, not mine. Or about how Legacy Auto is just basically eating Tesla's lunch despite, well, everything basically saying the exact opposite. It doesn't matter if other automakers actually compete in terms of having some vehicles to buy. Tesla has a margin that none of them can touch, and oh, by the way, I'm sure Gordon will conveniently forget to show how the other automakers reported in comparison to Tesla in terms of growth or profitability or margin or anything else like that. But the big surprise to the good side was the energy business growing much larger than I expected. That was the huge big surprise that I really got from this. Now, it doesn't make much revenue and is very low margin for now, but seeing the growth rate kind of accelerating ahead of the schedule and by so much was really nice to see. But I cannot say the numbers are, honestly, great either. Yes, overall, most of the numbers were up, still trending in the right direction, still huge plans for the future, everything tracking right along in regards to that. But I cannot say that those numbers were all great either. And a lot of the big price target projections are based on massive margins, which they can get to, they will get to, I think. But a lot of those models show it every year for the next 5 years, and we are already going to be severely behind the 8 ball just this year alone. But the margins, honestly, and I know we just talked about that, they weren't great. We all knew they were going to be bad. We knew that, but the margins weren't what actually concerned me at all. Now, they were well within where they need to be and still allow Tesla to print money unlike every other automaker out there. But what did concern me even more than that was the free cash flow. That was just devastating to the low and points to other problems if we're being honest here, guys. Now, some investors, and let me just kind of give you this kind of background up front, some investors think that free cash flow is actually a better measure of profitability because it takes away all the non-cash stuff and all the other accounting tricks that a company can use to boost their profitability in the first place. So even though we knew profitability was going to take a hit because of all those price cuts, and it clearly did, what we didn't know was that their profitability hit was actually bigger than the earnings numbers when you look at free cash flow. Now, is it going to send Tesla into bankruptcy? No, it's not going to do that at all, guys. Just ignore anybody that says that. But was it an absolute surprise that Tesla kind of buried it a little bit, if we're being honest here? Yeah, it was. And that is a problem I will be keeping an eye on for sure and kind of digging into a little bit further. And that lays the foundation for what I think is the big time screw job beatdown that will be coming soon to Tesla stock. I think Wall Street will try to keep Tesla down for an extended period of time, guys. I mean, a really long time, and completely screw with us in the meantime as investors. And there are 3 main reasons for that. And the last one, just honestly, it could be devastating for Tesla stock. But don't worry, I have a solution for that issue too. So number 1 is Wall Street, and probably not for a long time, is still not sold on Tesla itself or Elon, or both really, if we're being honest here. Now, we can like it or not everyone is sold on where Tesla is going, what they are trying to accomplish, and what it will do for the share price ultimately. That is all way up in the air. You also have many large investors that do not like Elon and his antics and would prefer, honestly, a completely different approach to running that company. And all you need to do is look at all the Twitter drama to see an example of what institutional investors just hate. I'm not going to rehash all that again, but I had to mention it because it's true, whether we like it or not. And honestly, he continues to have self-induced Twitter drama to this day. It's like it never stops. Now, we all know Tesla would not be where it is if Elon was not out there being Elon in the first place. But this will continue to be a sore spot for now for a lot of investors. And the second reason is because a recession or a slowdown will happen this year, or basically is kind of already here, and that usually hits the auto industry hard. Now, don't yell at me, but for now, many view Tesla as a car company, and we cannot just dismiss that position altogether when the cars make up the vast majority of the revenue, despite the growth that happened with the energy industry or the energy sector. The vast majority of the revenue was made up by the cars. Now, clearly, they are better than everyone else and next level on all kinds of things, but when dealing with Wall Street, they look very macro at times like this. And if the prevailing narrative, the prevailing wisdom is that car manufacturers get crushed during a recession or a slowdown, you bet your bottom dollar they will look to try and punish Tesla, at least in the short term. And finally, we have the earnings call itself and the numbers that came out of it. And here's the problem with these earnings, which were not great, but they weren't terrible either. There has been doom and gloom about earnings recessions or earnings crashes, which just isn't happening once again. We heard it was coming last quarter until it didn't happen, and same for the quarter before and the quarter before that. Now, to be clear, earnings have not been perfect either, but we're absolutely not a disaster or an apocalypse as described by almost everyone leading into the last quarter for the stock market, which, of course, in true YouTuber media fashion, you just say,
well, it didn't happen this quarter, but you just wait until next quarter. That's when it's coming.
Well, it's next quarter, and earnings have not been too bad so far, and obviously, despite a lot of headwinds, we are still seeing lots of top and bottom line beats, some strong guidance, or at least maintaining of guidance, and the banks were all across the board saying the consumer and businesses are strong overall and very well positioned, but that right there is the problem for Tesla. Unlike the previous quarter where Tesla did great and just crushed the numbers, this was honestly the first time in almost 2 years they had a down quarter and numbers that clearly were not, super great. I'm not saying they were awful, terrible, or anything else like that, but I can't really point to it and say that was a great earnings call either. It was mixed at best in my opinion. And that is a setup where Wall Street just loves to pummel a stock and send a stock down just as people are starting to kind of feel comfortable again with Tesla being on solid ground. And if you weren't buying at the low 100s and instead bought the rally up around $200 or so, or over 200, that can be a very unnerving position to be in. So what the heck happens then? Well, the truth is, this should excite you as a long-term investor. I mean, Tesla is executing incredibly well, and you can still buy shares at these prices and potentially even lower if Wall Street gets stupid once again, which it looks like that's kind of what they're on track for doing. And that is the exact scenario every long-term investor wants with every stock they want to own long-term. And that would be an extended time of incredible performance by the company, but the stock price stays flat or goes down, and then you have even more time to add more shares. I mean, it happens all the time, and the longer it goes, the bigger the kind of slingshot is, whenever it finally decides to run on the other way. And it will eventually run, guys. Don't worry about it. And then when it does run, you have more shares than you would have had if it had just run up a lot earlier. And on top of that, then people will FOMO into the stock because it came out of nowhere, just like Tesla did in 2020. The reality is, Tesla didn't come out of nowhere, and those that bought in 2017, 2018, or even earlier in some cases, saw signs all over the place that this was going to be a beast at some point, and they got the benefit of that rubber band being pulled so tight that not only did Tesla run, but it ran up big. And if they were adding that whole time, if they started buying in 2017, they were adding in 2018, 2019, all the way up to 2020, then they would have had far more shares than they normally would have had if it would have run up, which allowed them to build far more wealth than if the stock had not traded flat for 6 years. And that's another reason why I just don't trade. I just buy and hold and take advantage every time Wall Street gets stupid and says Tesla stock back down to my price target. That is how real long-term wealth is going.
Look, you stupid idiot! What are you even talking about? I mean, first you talk about the perma-bear Kathy and her ridiculously bearish price target. The only thing she should be bearish on is her fund because it's not 100% Tesla. Kathy might be good enough for Luke, but not even making the first cut for the Tesla ball. And now I'm to Luke, who is telling me that Tesla is going lower. Did you wake up in the bed realizing you pooped your pants and just thought it was breakfast in bed? I mean, I don't know how else to explain the crap that's coming out of your mouth. Bottom line, Elon was busy launching shaped rockets and blowing them up as a hobby. That's freaking hard, people. Tesla is easy compared to that. So forget about Bearcat Kathy and the pathetic loser Luke. My price target is $1 trillion per share because I'm the Tesla ball.